Hello children, how you all? I hope you all will be good. Children, today I will explain the basic terms which are very important and we will use these terms in account. In previous video also I have explained some basic terms. Today again more terms I will explain. So children, let's continue. So, first term is transaction. Children, according to the transaction, is an economic activity of the business that changes its financial position, that is called the transactions. Second, assets. Assets are items of value used by the business in its operation. Operations mean economic activities and activities. Example, cash, bank balance, furniture, machinery, etc. are the example of assets. So children, assets has two types. First, non-current asset. Second is current asset. Non-current asset, those assets which are held for continued use in the business for the purpose of producing goods or services are not for sale. These are the non-current asset. Example like land, building, machinery. Non-current asset also has two types. First, tangible asset and second is intangible asset. So, tangible assets, those assets which can be seen or touched, example, machinery, furniture, etc. Intangible asset, those assets which do not have seen or felt, not physical existence are called intangible assets. Example, goodwill, patents, copyright, trademarks, etc. Next is liabilities. It refers to the amount which the firm owes has to pay to outsider, also called debts. Liabilities will be calculated when we will asset minus capital, the remaining amount will be liabilities. It's also divided in two parts. First, internal liabilities and external liabilities. Internal liabilities, all amounts which a business entity has to pay to the owner. Example, capital. External liabilities, all amounts which a business entity has to pay to the outsider, that is called the external liabilities. Examples, creditors, loans, etc. Liabilities may be further classified into two parts. First, current liabilities and non-current liabilities according to the structure. Current liabilities which are to be paid in near future within 1 year period. Example, bills payable, outstanding expenses are the example of current liabilities. Non-current liabilities which fall due for payment in a long period after more than 1 year, these type of liabilities are called non-current liabilities. Example, long-term loans. Capital, which amount invested by the owner in the business, that is called the capital. Sales. Sales are total revenues from goods or services sold or provided to customer. Sales may be cash or can be credit. Children, sales are total revenue from goods or services sold or provided to customer. It may be in cash or credit. It also has sale return type. Some customer might return the goods to the seller, also called return inwards. Next, Next is revenues. These are the amount of the business earned by selling its product or providing services to customer are called sales revenue. Children, according to income, amount received from sale of goods called revenue. Cost of goods sold is called expenses. Surplus of revenue over expenses is called income. Example, suppose goods costing 4 lakh are sold for rupees 5 lakh. The sale amounting to rupees 5 lakh is the revenue. The cost is 4 lakh is expenses. Difference amount 1 lakh rupees, it is the income. So children, suppose a producer has manufactured the product and he has expensed their product 5 lakh rupees. and when the producer has sold their product, that time this amount is 5 lakh rupees. So according this, producer expenses are 4 lakh and the selling revenues income has received by the producer 5 lakh rupees. So 1 lakh difference amount is the income of the producer. We will calculate revenue minus expenses. Remaining amount will be income, and revenue minus income is equals to expenses. Expenses. Expenses is the cost incurred in producing and selling the goods and services. Like example, rent, salaries, wages are the example of expenses. Next, profit. Profit increase the investment of the owner is called profit. Gain, that transactions which are incidental to business. Example, sale of fixed assets, winning a court case are the example of gain. Loss, when total expenses exceed to the total revenue, that is called the loss. If revenues are rupees 2 lakh and expenses are rupees 2 lakh 40,000, so the loss amount will be 40,000 rupees. Next is goods. All those things which are purchased for resale or which are used for producing the finished product which are to be sold, that is called the goods. Drawing, when the owner has withdrawn the goods or the money by their personal use for their personal use, that is called the drawings. Purchase, when any customer has purchased some goods, that is called the purchasing. Stock is also called a inventory, is a measure of something on hand, goods, spares and items in a business. It is also called stock in hand, opening stock or closing stock. Those goods which are purchased for reselling and which are laying unsold at the end of accounting period are called stock. It has two types. First, opening stock and closing stock. Children, according to opening stock, unsold goods at the beginning, that is called the opening stock, and closing stock, unsold good at the end, that is called the closing stock. I will explain these topics. First, meaning of bookkeeping. Also, in this bookkeeping, 4 activity has include first identifying, measuring, recording, classifying. These terms today I will explain. Second topic is accounting process step. Accounting meaning process step also has used 3 process step. First, summarizing, analyzing and communicating. And third topic is accountancy. Also I will explain the difference between accounting and accountancy. Next, basic terms, like today I will explain entity, transactions, assets, liabilities, capital, sales, revenues, expenditure, profit, gain, loss, discount, voucher, goods, drawings, purchases, stock, debtors or creditors, and many more. So children, let's continue. So children, first, the meaning of bookkeeping. Bookkeeping is an art of recording business transaction in a set of books. According this, we maintain all the records in written manner, and also we include 4 activities in this. First, identifying. Identifying means when the firm has identified the transactions of financial nature or note. Second, measuring the identified transactions in term of money or not. Third, recording. Recording, we record all the transactions in the books of accounts. Fourth step, classifying. Classifying means then we post all the transactions into the ledger. Next, accounting process step. First, the meaning of accounting. Accounting is the process of recording financial transactions, and the accounting process includes summarizing, analyzing and communicating. Second, analyzing. analyzing the summarized result, it's correct or not. So according to analyze, we have to check all the accounts has correct or not. Third step is communicating the information provides to the interested parties. So after the communicating firm has provided all the information to these to their users, like external or internal. Next is accountancy. So children, accountancy is the process of managing the income and expenses of a business. So children, now I will explain the difference between bookkeeping and accounting. First, scope. Bookkeeping includes identifying transactions of financial nature. Second, in accounting, in additional to bookkeeping includes summarizing classified transaction. So children, according to the bookkeeping, first we have to identify those transactions are related to financial nature or not. But according to accounting, we have to summarize and classify all the transactions which have used in books. Second stage. Bookkeeping is primary stage. So first of all, we have to write all the transactions which are related to the firm. This is the primary stage and this is called bookkeeping, is first step in this book. Accounting, it is the secondary stage. After that, we have to summarize, classified, communicating, recording. This is the secondary stage. Objective, to maintain systematic records of transaction. So according to bookkeeping, we have maintained all the records in a systematic manner. In accounting, to ascertain the net result and financial position of business and to communicate them to interested parties. So bookkeeping, we have record in a systematic manner, and according to the accounting, we have to prepare final result and check the financial position of business and also provide the information to interested parties of the business. Next, 4 is nature. Bookkeeping function is routine. So bookkeeping record we have maintained in daily basis. So this is a routine. And accounting, it function is analytical in nature. So after the bookkeeping, after the record, we have to classify, summarize and analyze. Next, who performs? Bookkeeping function is performed by junior staff and the accounting function is performed by the senior staff as accountant. Next, knowledge level. It can be performed by person having limited level of knowledge, because in the bookkeeping no specific knowledge should be needed, but according to the accounting, specific knowledge should be having as a senior staff or as an individual person. It is performed by person having higher level of knowledge that of bookkeeping, because according to the bookkeeping, the person only record all the transactions and not classified, summarize and prepare the final result. But according to the accounting, the firm and the person has prepared the final result, financial position, summarized, classified. So this person will be having special knowledge related to accounting. Next topic is difference between accounting and accountancy. So accounting, it is concerned with recording, classifying and summarizing of transaction. So children, according to accounting, we have record, classify and summarize all the transactions. In accountancy, it is the body of knowledge of prescribing certain rules or principles to be observed while recording, classifying and summarizing of transactions. But children, according to the accountancy, we have to follow the some rules, certain rules, principles and the formats in which the help we have prepared all their final accounts. And so according this accounting, we have record classify and summarizing, these are the step of accounting. But in accountancy we have observed recording, classifying, summarizing of transactions and follow all the certain rules and principles related to accountancy. Second, scope. It is narrow in scope. Accounting start where bookkeeping ends. So accounting will be start when the bookkeeping will be end. Accountancy, it is much wider in scope and includes bookkeeping as well as accounting. So in accountancy, both the terms will be include accounting and bookkeeping. Next, relation. It depends on bookkeeping. So first, if we have to maintain the record, if we have the record, after that we can be calculate, we can be classify, summarize. But if we have not any written record for the statements, transactions, so how can we prepare as a result? How can we check the financial position of the business? So it depend on bookkeeping. So accounting will be depend on the bookkeeping. Accountancy, it depends both on bookkeeping and accounting, because according to the bookkeeping we have record all the transactions in monetary value. According to the accounting we have classify, summarize, recording and analyze. So both the terms will be used in accountancy. Functions. Its main function is to ascertain the net result and the financial position of the business and to communicate them to interested parties. So children, according to accounting, the main function of accounting is net result and financial position firm has to prepare, and time to time firm has checked the financial position of the business and communicate. After that the firm has decision, take the decision and communicate them to their interested parties. And according in accountancy, it depends both on bookkeeping and accounting. It includes the decision making function also on the basis of information provided by bookkeeping and accounting. So according to the accountancy, firm has taken the decision and connect with other parties and given the information to their parties. Now the children, basic terms in accounting. First, entity. Entity means a reality that has a definite individual existence. Business entity means a specifically identifiable business enterprise like um, super bazaar, hire jewelers, ITC limited, etc. So children, everybody have their individual existence. So according this, all the firm has their individual entity, all the person individual their entity in physical existence or in physical presence. So according this, like super bazaar, this market has their individual existence. So this is super bazaar. According this, we have to know there is a market where all the things has available. So this is their individual entity. Next, transactions. All the monetary terms which are related to money, all the monetary terms which are related to money are called transactions. The firm first identified which transaction we have used in business and which are not. So after that, first the firm has identified all the